Okay, so Tattooed Chef shareholders, it's time we take a break from the share price. Okay, I feel like we've been so absorbed by the share price for months now that we haven't actually focused or taken the time to actually look at the business. Let's take a moment and reflect on our recent accomplishments, okay, and the development. So for this, I'm going to revert back to Q1. So I've been through the earnings call quite a few times now. I've also been through the transcript, made a couple of notes, and I compiled it into a report. And this report is something I shared with my Discord members a couple of days ago. But I figured a lot of my subscribers are Tattooed Chef shareholders. So I figured let's just go through the report together. And this is something I plan to do every quarter with my high conviction stocks. So I'm going to do this with Palantir, Celsius Holdings, GoPro, Sonos, quite a few companies. I'm going to compile a report and it will all be available for my Discord members. So if you like what you see here and you want to get a report of the rest of the companies that we follow on this channel, and you can do so by joining the Generational Wealth Builders Discord community, and the Patreon link is in the description below. So let's dive straight into it. So let's take a look at some of the company's developments. Okay, first of which is the acquisition. Of course, you know, the announcement came out a couple of weeks ago that we acquired the New Mexico food distributors, and we also acquired the Casting Tortilla Facilities Factory. Now, the combination of both these acquisitions will be referred to as the Foods of New Mexico, okay? And that entire purchase cost the company $35 million. So prior to this, you know, from the Q4, we were sitting on $200 million in cash. So we only splashed out $35 million for this acquisition, which, according to Sam Galletti, the Foods of New Mexico is expected to contribute $200 million in revenue by 2024. So within 3 years' time. I mean, I don't know about you, but that's an insane return on your money. You know, if we do achieve this target of $200 million, that's going to be a phenomenal return on investment. And this is some of the things that I'm starting to pay attention to when looking at companies. You want to look at what the management are doing, what acquisitions are they making, and what is the return on that acquisition. So to spend $35 million to create a new revenue stream, which is called the Foods of New Mexico, that's going to generate $200 million in revenue within just 3 years, that's phenomenal. This doesn't include other products, okay? This is just Foods of New Mexico by itself. So I'm guessing in the next couple of reports, once Foods of New Mexico is up and running, in the breakdown of our total revenue, we'll be able to see Foods of New Mexico should be a separate part of the breakdown of revenue. Okay, so it'll be exciting to follow this and to see whether we can achieve this target by 2024. All right, now, so moving on to expansion over Q1, okay? So we had the 2 new facilities, which added another 118,000 square foot, and that will help us to expand production and manufacturing capabilities to diversify our product portfolio. And that's exactly what it is. You know, Tattooed Chef, people label Tattooed Chef as a freezer company, but we are not a freezer company. This Foods of New Mexico is going to be able to service business workers, schools, colleges. These are all the things that Sam Galletti mentioned within the Q4's earnings call. And this is exactly it. You know, tortilla wraps, other plant-based foods that are going to be ready to eat and going to be delivered to all of these sites. This diversifies our portfolio tremendously. So with that came the launch of refrigerated and ambient products as a result of the new facilities. So again, plant-based tortilla wraps. All of this makes up the food service that Tattooed Chef will be delivering. And again, we're no longer just a freezer company. So bears, please put that argument to bed. It's game over. We've expanded our product portfolio. So ramping up production and increasing capacities in both California and Italy facilities to meet expected guidance and sales volume. So we know the company recently updated their guidance. In order for them to meet that guidance, they are ramping up production, and this is what they're letting us know, and that's very good to see. Personally, I think we're already going to smash our guidance, but just in case you had any doubts, we are ramping up production, and that's going to help us increase our capacities in both of our sites within California and Italy, and this is how the company plans to meet guidance, okay? So now the combination of all 4 facilities, so your 2 new facilities that make up the Foods of New Mexico, the facilities in both California and Italy, the combination of all 4 gives us 275,000 square feet of production and manufacturing capabilities, which is only just the beginning. Okay, so this gets me very excited because the more facilities that we begin to add, the more acquisitions we make, the more we can expand production even further, which will generate even more revenue. And I mean, I just get so pumped. I get so pumped. So let's move on. Let's move on to product progression. Okay, so branded products now account for 69% of total revenue. And remember, Sam Gillespie did say that they were expecting to hit 75% to 80% by 2023, which is going to be easily achievable, especially with the recent announcement regarding Whole Foods, which will now start selling our branded products. And this is Whole Foods nationwide selling our branded products. It wouldn't surprise me if by the end of 2021 we see branded products hitting 75%, which is just going to be absolutely phenomenal. Now, they've also given us a timeline with regards to the ambient products, and they expect to launch that by the end of 2021 or at least early next year. It'll be very good if we can achieve this target at the end of 2021, but just in case we don't, early next year is when we should start to see ambient products flying off the shelf. So we are now currently at 42 branded SKUs, okay? 54 branded SKUs expected by the end of Q2. So we're going to look out for that. And currently in Target, as of Q1, we were sitting on 17 branded SKUs that are currently offered right now in those shops. Plant-based pizzas launched mid-April, which we already know. I think there's about 5. I think there are 5 different types of plant-based pizzas, and they were exclusively at Maya stores and gaining distribution in other retailers, including United Supermarkets, Drool, and ATD in Q2. Okay, so now let's move on to retail development. Okay, so Target said we were the most successful frozen food launch in its history. Period. Like, that's insane. Okay, that statement right there, it still hasn't quite sunk in yet. We were the most successful frozen food launch. That should really paint a picture with regards to how much demand there is for Tattooed Chef products right now. It's insane. It's insane. Okay, so the club channels saw exponential growth as well. The Akayo Bowls were featured in the Costco ads, which was mailed to 105 million club members across the country. We saw 10.8% growth in Sam's Club and up 128% from a year-over-year perspective, making it one of the fastest growing brands in their frozen foods category. Again, guys, we are currently setting records, okay? We're setting records in Target, we're setting records in Sam's Club, and this it's amazing. It's absolutely amazing. I'm so excited to be a part of this company, and there's a reason why it's my largest position. Okay, there was a statement from the earnings call which I included in this report. The club channel requires much higher volume to stay on shelf compared to conventional retail, and we continue to exceed retailer expectation. This gives us confidence as we enter new channels like groceries and meet sales thresholds. Is there anything else that needs to be said about this incredible company? So let's look at our performance. Okay, so we've got branded product stores. Okay, so end of year 2020, okay, we had 4,300 stores, which gave us 23,000 points of distribution. Now moving on to Q1 2021, we're now at 6,065 stores, which provides us with 31,000 points of distribution. And the expectation for Q2 is to be at 7,227 stores at 39,000 points of distribution. So our points of distribution is growing at a steady pace, you know, so between end of year 2020 to Q1 2021, we saw the points of distribution increase by 8,000. And again, they've applied the same logic. So by Q1 2021, if we're growing at that same rate, we should be able to meet that 39,000 points of distribution. If we exceed that, that will be even better. But 39,000 points of distribution is our realistic expectations. Now, if we look at the total product store placement, okay, at Q2 2021, we expect to be at 7,477 stores, which will provide us 4,275 points of distribution. And again, I've put a question mark with regards to where we'll be in Q3 2021 for stores and also for the points of distribution. But what we do know is that our end of year target is 10,000 stores. Okay, guys, 10,000 stores by the end of the year with 65,000 points of distribution, which I think we will absolutely crush this. Okay, I think this is going to be achievable. The company seem determined. Everything at the moment is falling into place, and there should be really no reason why we can't achieve this by the end of the year. So, but that is our target, and you should have this written down in your DD. So that's where it stands right there. Now, the final part of the report included the guidance for 2021. So let this just be a reminder. Our revenue guidance has increased to the range of 235 million to 242 million by the end of the year. So which implies a 58 to 63% increase compared to 2020. Okay, and if you recall, previous guidance was at $222 million. So this revenue guidance doesn't include any revenue from the Foods of New Mexico, but we should expect to hear an update from the company once production for Foods of New Mexico begins at the facilities within the coming months. So again, I'm really excited about that. Adjusted EBITDA has been reduced to the range of $2 to $4 million due to expected self-investments. Previous guidance was for EBITDA to be within $8 to $10 million. Okay, so with regards to inflation pressures, they expect sequential improvement in the adjusted EBITDA as we progress throughout the year. Again, the whole topic of inflation right now is really up in the air. To be honest, nobody really knows, but it does help that we are vertically integrated, and that will help to keep costs under control. Now, the gross margins will be within the range of 20 to 25%, but that has now been changed because the company did have to update their financials, and we saw the gross margins slash in half. So I'm going to be updating this report, and you've got the links to the financials there. So that is my whole summary of the Q1. That's my report. I hope you guys found it useful. Again, as long-term shareholders, we need to be focused on the company and not the share price. So I think I'm going to be doing a lot more of these because I don't want us to be overly obsessed with the share price or the ticker movements or whatever. Focus on the business. And Tattooed Chef is an incredible business at the beginning of its growth phase, and we are very blessed and very fortunate to be invested very early on, and I'm extremely excited about the future of Tattooed Chef. So that's all I have for you in this video today. If you found it useful, please make sure you smash the like button, hit the subscribe button if you're new to the channel and you want to see more video content from me. Also, if you want a bit more of my research from a weekly basis, then you need to join my Discord group. But with all that said, remember, I'm not a financial advisor. Please make sure you do your own DD. Thank you so much for watching. I appreciate your time, and I'll catch you in the next one. Peace.